Two companies within my portfolio will be releasing earnings today. And these two companies most often fly under the radar within my videos. And that is because they are Shopify and Monday. And if we just look at the chart from Shopify, we can see that this company is chugging along just fine. Because as for Shopify, I am up about 51.6% on this name. And for Monday, I'm up 53.74%, as it's also one of the original buys from my portfolio, one of the first holdings I bought within this. Now, Monday is expected to report earnings today, and Shopify is expected to report earnings tomorrow. But for me, I'm expecting Monday numbers to come out while I'm filming this. So if that happens, I will be reporting on those numbers immediately as well. So let's go through the analyst expectations for these companies, starting with Shopify, so we can give Monday slightly more time to report on their earnings. Now, for Shopify to start with, we can see that analysts are expecting $2.1 billion in revenue. This number of revenue will be up 23.3% year over year, and we are expecting a gross profit of $1.097 billion, so $1.1 billion basically. Now, this number of $1.1 billion in gross profit will give Shopify a gross margin of 51.9%. Which in all honesty is very, very good, because remember, they don't just sell the subscriptions for the website, they do a bunch of value-added services with it, including payments and stuff. So a 51.9% gross margin is really good. And if we look at it historically over here, we can see that this is pretty much in line. Now, continuing, we can see the adjusted EBITDA, 347 million, or a adjusted EBITDA margin of 16.4%. And a year-over-year growth of 23.88%. So that's all looking really good. Then EBIT adjusted, or EBIT, the adjusted EBIT number, earnings before interest and tax, 334 million, or also year-over-year growth of 23.3%, and an adjusted EBIT margin of 15.8%. So overall, this is still looking really, really good, really promising. Now, if we then look at the EPS numbers, because the profitability is what Shopify is now being really enthusiastic about, we can see that they are expecting to come in with 18 cents of GAAP EPS numbers, a year-over-year change that is down 67.2%, or adjusted EPS of 27 cents, and this is up 13% year over year. So overall, quite good. Now, let's continue down slightly more even, because what I want to look at is the cash flows and the cash from operations, because once again, this is also one of the profitability metrics, and we can see cash from operations at 348 million and free cash flow at 342 million. So once again, the year-over-year change of in the 23% range at 23.85% now. Now, I really want to thank everybody that has been subscribing to my channel. Later this week, I will go through a video going over my portfolio once again, where I think I need to strengthen in, where I think I need to be a bit easy on it, and how that would look for the coming quarters or the coming months going into the next earnings report. Now, I'm only 10 subscribers away from that 1,000 subscriber number, that first milestone. So once again, I want to thank everybody that has been subscribing to my channel, but I also wish for you to subscribe to it as well and help me reach that 1,000 subscriber number. And while you're at it, make sure to hit that little thumbs up button, because that helps me with the algorithm and helps me push this video towards other watchers, other YouTube viewers. Okay, so then if we look at the fundamentals of Shopify in further detail, we can see that Shopify is trading quite rich. And with quite rich, I mean quite significantly rich. Although they always do this, but they always also beat EPS expectations. So we can see a next 12-month PE ratio of 72.7. Now this is very high, although historically it might not really be. I don't know if we should look at it strictly historically, because of course there's a market average which might be a bit more significant. But 72.7 is a very high next 12-month PE ratio, although it always trades at these numbers. And I mean, here we can see that even better, because we have an average PE, an average forward PE over the past 5 years of 205.9. Now, this might not be all too relevant, however, because we know that Shopify has just been turning actual profits. So a next 12-month PE ratio, a forward PE ratio of 204.9 isn't all that telling. However, we can see it right here. This is where I was buying it at around a 50 forward PE. I think it was right here actually. Now, I do really like this business, and what I especially like is the growth numbers they are expected to have, because we can see 22% earnings growth, or revenue growth, I should say, in this year, 20.8% expected next year, and 21.1% expected the year thereafter. If we look at the EPS numbers, it is expected to go up by 51% this year, 24.3% next year, and the year thereafter at 33.46%. So what we can say is that Shopify is growing extremely quickly, as well as in revenues as in EPS numbers. And that's a quite rare combination. Now, what I thus hope for is that this company is doing, well, I hope they are doing well, but I hope that the stock might find one thing that they do not really like all that much. The stock gets a temporary sell-off and I can buy a bit more, because I quite conservatively bought into this holding. And the reason I did so is due to the valuation, as well as due to the volatility. However, for now, it's only a 4.3% weighting in my portfolio, and I wouldn't mind bringing this up to 6 or 7.5% of my portfolio, because this company is just extremely good, very well diversified, lots of revenue streams, and very, very difficult to disrupt. Now, if we then look at Monday, there is one thing I immediately want to highlight, and that is that we can see that the stock is up 5.6% as of now. However, I have been checking their website and they have not reported their earnings yet. This is strictly on the anticipation of their earnings. So I can't really say what the numbers are as of yet. Now, they might come out in the upcoming, well, minutes, half an hour, and I will still be able to report on them. However, for now, the stock is up, but this is just on the anticipation. That was a slight disclaimer I wanted to get out of the way. So let's look at the earnings expectations, because what we can see is that the company is expected to report $246 million in revenue. However, this is quite a strange number to me in my mind, because the company has reported that they have crossed the $1 billion average or annual revenue run rate, which to me sounds like they should be over 250 million per quarter. Now, that might just be me, but that's what I was thinking when they released that press release. Now, even still, 246 million would mean a year-over-year change in revenues of 30.17%. I mean, which is really good, right? That's fast revenue growth. That is really fast revenue growth. Now, what we can then see is gross profit of 221 million expected, or about a 90% gross profit margin. I mean, it's a SaaS company. You can expect these numbers, right? But still 31.47% year-over-year growth, with an adjusted EBITDA of 26 million, which is down about 3% year-over-year. Now, if we then continue downwards, we can see the EBIT number, the earnings before interest and tax, at 22 million, or a year-over-year change of negative 6.6%. Now, I'm gonna be honest, I'm not all too sure where that lies or why that number is down slightly, but I guess it will be through the sales department, which they said at the beginning of this year that they want to strengthen that throughout this year. So most likely it's that part. However, I expected them to grow faster than they have been or expect them to grow their earnings faster than they have been growing that department. Now, the adjusted net income is expected at 33 million, basically flat year over year. Now, in order to give a decent overview of the EPS that is expected and to look at it in which context to look at it, we can see that Monday is expected to report 3 cents of GAAP EPS and 63 cents of non-GAAP EPS. However, this company has continuously beating, and not only beating, but just smashing the EPS expectations out of the ballpark. If we look at the GAAP EPS, we can see that it was negative 15 cents, or negative 30 cents was expected in Q2 of last year. Then we had 15 cents reported for a negative 35 cents expectation, 24 cents reported on a negative 21 cents expectation, 14 cents reported on a negative 11 cents expectation, and in the latest quarter they reported on 27 cents of GAAP EPS, while only 3 cents was expected. So in all honesty, we can look at the same thing, or I'm expecting the same thing, and I think analysts or other investors are expecting that also, seeing how this company trades. Now, by saying that, seeing how that stock trades, I mean that this stock has been just absolutely going upwards in such a linear and stable fashion. Or stable, it's quite volatile, but it is very linear. It's having some drawdowns, but not all too aggressively. And especially seeing that it trades at 113 next 12-month PE ratio, that is quite amazing in my opinion. Now, this forward PE number is extremely high. I completely agree with you if that's what you're saying. And that's making me nervous as well. However, seeing what I did with Duolingo, which I sold, and in all honesty, I quite regret selling that one. I'm just planning on holding this company, because I'm not planning to sell it anytime soon, anyways. Because I think it has a great future ahead of it. So the temporary volatility is something I think I just have to take I just have to take with it. And the other reason I'm saying so is because if we zoom it in a bit, here I thought it was slightly expensive. It dropped, but this is August. The August 5th drop, the Japanese carry trade that exploded. Then it went up to the $260 area, and I thought, oh geez, I might want to take some profit because this is really going fast by now. Because I've been investing in this company since about this plateau right here. So at 260, I thought, okay, this is looking very good. And it dropped slightly back to 240. And I thought, oh, you see, I should have taken profits, right? And then it climbed back to 280. Was 300. Now we are at 320. And every time I'm thinking, oh, I might want to sell this company, it just continuously adds a little bit to that share price, which is a lot of fun, but it's a continuous state of thinking, it's a bit expensive. Aren't there better opportunities? But then it just proves why it's expensive. So that's a thing to keep in mind with Monday. Okay, so as for Monday and what I am expecting, we can see that this is from their last earnings. Okay, this is not their current earnings yet. It hasn't been released yet. I am looking at it. But we can see that in Q2 24, they had $236 million of revenue, or up 34% year over year. Now, analysts expect that number to be up 30% for this quarter. However, when we take that $1 billion annual revenue run rate, and we say that that means that they should have at least $250 million in revenue, that will mean 32% revenue growth for this quarter, because I believe that that statement came quite early in this quarter. So therefore, I'm taking it as they will be very close, possibly even there. But If they are there, that will be 32% revenue growth, and that will be very much in line with the growth we have seen over the last few years, which is really impressive in my opinion. Now, that revenue growth will mostly come from the continuous push up markets. What we can see in this graph is that they grew customers with 10 plus users, the total amount of customers with more than 10 users, by 15% year over year, which is decent, but it's not all that high. Now, the customers with $50,000 in annual revenue run rate, they grew that number by 43%. So the larger customers are doing quite well. They are pushing customers towards that numbers. And the $100,000 plus, they grew that number by 49%, which is, in all honesty, is very impressive in my opinion. And then finally, we have the net dollar retention rate for Monday. And we can see that that is at 110% in the latest quarter. Now, this should be ticking up because they have continuously, since the end of last year, been sending messages that they expect net dollar retention to creep up again in the back half of this year. Now, Q3, in my opinion, would certainly count as the back half. So I want to see this number higher than 110%. And I think analysts want to see that as well. But for now, as you can see, we haven't gotten the earnings just yet. So maybe I will hop back in this video when they do release them while I'm editing this video. However, for now, this is it. And if they release earnings after I'm done editing, then I want to thank you for watching. I will report on them on Wednesday together with Shopify's numbers. And I hope to see you in that video. Thank you for watching, and I hope to see you in that one.